Hello, everybody. Welcome to my new weekly review. Last week, I only closed one trade GBPCAD. The rest of them are still running. A few of them, I think four in total, are still running, but I don't place them yet in this week. Only when they close, I put them in that week. So let's start on GBPCAD. This was a loss for me where I had some multiple conversations about. This was a pullback trade with a bullish gem on the 4 hour with break of structure. I will go over the daily. And what we saw, we had a first time break trade or pullback trade, which means we were making here a low, a high, low, higher high. When we first break this previous higher low wick, then it's for me a first time break when we have that here. And what is the second thing we need to have is a buying zone. This was our first daily buying zone that got tapped. We had here a potential new action of this low wick here, fake out potentially, and we could go potentially back to this potential shoulder one, head, shoulder two, and here also some nice support here. So this could be your supply and demand, so that can hold your price back down. So this was our first target, and the second target was this shoulder one, head, potential shoulder two within that bearish W, that this can be our reversal pattern to go for that downside momentum. So I was expecting a pullback, but what I saw here was that we just didn't tap this daily supply and demand zone. We just didn't tap it. For me, it was still clear to go, but in the recent months, I saw that this kind of trades, when they are so close to this daily supply and demand zone, that it can play against us and it can be a loss. In this case, it's a loss. And also, if I go over the 4 hour, so this was our bullish M, first leg, second leg, third leg. Going back here, I want to take a trade on this previous structure, which was our resistance here. Then it could become our support here. And our stop loss below this previous higher low wick here, 5 pips. And then you could see we just didn't tap this daily supply and demand zone here. We went to the downside. I was in a trade. And then the other thing or the second conversation I had was this corrective price action going to the upside. You can see we had here an impulse to the downside, or this is also your A, B, C correction, impulsively with the third leg coming back, and then A, B, C, and this is for me a corrective leg to the upside. And then I was in doubt, okay, do I need to close it manually? Do I not? Because this thing I also saw in previous trades that this kind of trades, when they are going correctively to the upside with that buy trade, that it will not play out. And in this case, it didn't play out. So these were the two conversations I had. The daily supply and demand, so that already got tapped here, and that corrective nature here, that the buyers are not going in that market. It's really slow, so this is the reason why this trade I think is a loss. So if I go over the weekly was for me still a 3 out of 4. For me, we had trend for us. We had here this bullish M here. We had here this major bullish M for you working. And as an trend line here, first touch, second touch, third touch, we had that momentum with us, impulse, correction, impulse, correction. And the only thing there was a candle close. This one was against me. The FIP was for me. I put the FIP from this low till this high. We're in the FIP levels and the supply and demand zone here at this point, aligning with the third touch of that SN trend line here, aligning with this shoulder one here that can potentially, or this IC here, which is our shoulder one, head, potential shoulder two, which could go to the upside. And then the supply and demand zone, you can see at this IC acting as resistance, support, support, resistance, 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 potential support. So aligning with that IC, it's a nice supply and demand zone. So 3 out of 4. So this was a trade. and this was a loss, and we know now why it was. Then missed trades. So there were some three missed trades, with one of the three can maybe a question mark, but I will go over the first one, NZD-GPY, on a daily, weekly, and 4 hour. So on the daily, what can you see? We have here a potential pattern within a pattern. So you have your shoulder one, head, shoulder two, within that bullish M, like this. So pattern within a pattern. I could see this as a small pattern. I didn't take my limit here because why was that thing that I do it? Because we could potentially reverse from this selling zone. So I wanted to wait to tap the supply and demand zone again. That was the reason. So yeah. Then, so this daily, we tapped these daily lows. So we tapped here this buying zone daily lows. So I was looking for a pattern. If I go now to the weekly was for me, yeah, 3 out of 4 because the trend is still bullish. We have this low, high, low, higher high. Within that, also here is bullish M. So bullish M within a bullish M. I took my fib from this low till this high. We were in the fib levels, and this was our previous resistance that could become support where we had a bullish candle close. The only thing that could play really against us was this selling zone, which acted here as resistance, support, resistance. So this could be playing against us. If you counted supply and demand zone against you, then it would be still a 2 out of 4 for me. So yeah, and the candle close, this one was also against us because it came all the way to the upside and then it closed all the way back down. So it's a major candle, really bearish candle close that had a lot of sell volume in it. And on the 4 hour, what could we see there? We had a first leg, second leg, third leg, fourth leg, not just going back to this daily 4 hour IC low. I just put it 1.5 pips to the upside. And the thing was here, I was triggered in my demo and on my real accounts because of the spreads, I wasn't in the trade. So this trade was active on my demo. I was running on it and it went, I guess, a break even. Yeah, it was a break even here. So I didn't took some partials because I wasn't running 2.5%. And yeah, on the daily, it was sitting on that supply and demand zone, or it was coming back to that supply and demand zone. As you can see here, support, support, resistance, resistance here, and then it went to the downside. So this supply and demand zone was there the zone that reversed the price back to the downside. You could see also here that impulse and that small correction, and then that selling zone got in, that supply and demand zone, and we went lower. That was the reason also that this trade went break even. So I will go to the next trade, GBP NZD. This was the same thing. I was triggered. No, I think yeah, my entry wasn't triggered on my real account. So if I go over the daily, what we were seeing here on the daily on GBP NZD was a hedge or retrace trade. So we had a fib from this low till this high. We had a fib completion here aligning with the daily candle. It is not a fully candle close, but it's aligning with the fib completion on the weekly and a selling zone. And then I was looking, okay, we can come back to this IC here. So it's like a magnet. So mostly it wants to come back to this IC, this magnet. Between all the blue candles, you have one red candle, so it works like a magnet. So I wanted to see there some pull back to. If I go over the weekly was here at this supply and demand zone and this nice IC, which could act as a supply and demand zone. You could see it tapped it really nicely. So I was looking for the trade coming back here, aligning with the supply and demand zone here, because this can be your flat wall then back to the downside. And we had the fib completion from this low till this high, nicely aligning with the daily fib completion, aligning with that weekly IC. So there can be some momentum or orders sitting there to go for the short. So we had a 2 out of 4. The fib was for us because we had a fib completion and the supply and demand on this one was for us. The trend is against us, and that candle close here was also against us, really bullish closing. Then the 2 out of 4, we could take the trade. Then on the 4 hour, what we saw on the 4 hour was here that bearish W without a break of structure. But if I saw on the 2 hour, we had also a pattern and a pattern. And you can see it also here, shoulder one, head, shoulder two. So I was really looking at this trade while I was doing that live event. I was looking at it, I placed my limit. My stop loss was above this wicks here because it's a pattern within a pattern, and that entry just one pip to the downside, and because of the spreads I wasn't in the trade. So on the 2 hour it was also a pattern within a pattern, so it is then a trade I can take on that hedge position. And yeah, it went break even if I was in it. So yeah, it was a good trade, only unfortunate that the spreads were too high at that moment. Then the last one, AUD can be a more question mark to take this trade, but I was placing in it in my missed trades. So if I go over the daily, you can see the daily for me is now a big bullish M with an inverse and shoulders big pattern. So for me, is this the first leg, second leg, third leg, fourth leg coming back more corrective than the third leg, which is nice. I can see it as a big pattern, and we have here a nice support week, resistance week where we were above it, then resistance week when we were below it, acting as support when we are above it, support, buyers, and potentially again buyers here to potentially touch this shoulder one here. Then this can be your senior head, shoulder two, and here the support. So this can be your supply and demand zone that can hold the price potentially back down. It's not the valid shoulder one, head and shoulders, so it's not a valid one, but you can see it like this because we have a fake out of this smaller bullish M. You can see we are closing a little bit below it, but not below that wick here. So you can trade the fake out there. So then I went to the weekly, and the weekly was 3 out of 4 for me. For me, the trend is still bullish. So the trend is bullish. We are making here low, high, low, higher, high. So we have that bullish M. We made here a false break of this previous higher low. You can see that to take the retail trace out with a new action of this higher low wicks here. So this was a new action, which we had some new liquidity to go to the upside, aligning with the supply and demand zone here. And then we received that first leg, second leg, third leg, fourth leg, a bullish M, the momentum with us. You can see impulse correction, impulse correction. The only thing that here was sitting against us was this previous structure here, where we rejected on and we went to the downside, but it was not that impulsively, so yeah, it was good to go. And the thing here also was that candle close, this red one, the previous one was against us. So we have a 3 out of 4. The fib was still valid from this low till this high. And then the supply and demand zone here on this daily zone of interest, I was placing it there, and you saw it here acting as support, support, resistance, resistance, support, weak support, potential support again to go to the upside. So this was a clear 3 out of 4. Then on the 4 hour, what trade you can take? The deceleration you couldn't take because, yeah, potentially if it's a pattern in a pattern, which we have here, you can take the diesel. But for me, it was really big, and I wasn't looking, yeah, that much to the diesel. So I was looking at another trade, which was the first leg, second leg here, third leg, fourth leg coming back. So a bullish M without break of structure. And here is the thing again, we just didn't tap the daily supply and demand zone, that shoulder one that I was saying here, then this head, shoulder two, and we just didn't tap it. So notice that this trade can also not play out because we just didn't tap it. It was too close. But yeah, I just placed it in let me straight. And on the 4 hour, on the 2 hour, it was more clear. On the 2 hour, it's a clear bullish M, and on the 4 hour, you just need to see it, yeah, more closely that this is a red candle, so this can be your bullish M. So this trade is more dangerous to take. Actually, you could take here the deceleration because it's a yeah pattern within a pattern. You can take this kind of trades deceleration. So I just could set it here also in. So for me, I can copy this like this here, and I can say here that I can trade the deceleration, and then I need to place here my new trading view links in it, and this could be a potential 2.5%, I think. If I look at the charts, it was around, yeah, it could be 2.5% to take out. So this could be the trade. I hope you liked the weekly review. And yeah, see you next week. Bye, everybody.